Good morning, everyone. This is Critical Point, Rich Pawson, and this is the weekly update of the European stock index, ETFs, and indexes, but then some global indexes, global stock market, using the business cycle modeling and whatever other techniques I have to throw in with it. It's Wednesday, September 24, 8:52 a.m. Eastern. I'm probably going to make this a free one this time. So tell others, okay, to get on board, okay? They can get a grains only subscription and can also maybe get some free dollar Bitcoin stuff that we throw over in the stock market side. They can get a stock market subscription about the economy and global stock markets and Bitcoin and oil and crude oil, a lot of the economy stuff, and some excellent timing of the U.S. stock market at least. The Europeans are a little new to us, but it's using the still same business cycle modeling. So they would sign up for the Stock Index Magi and tell them to go to criticalpointpod.com, get on board. Okay, here we go. By the way, I've used this method for like 30 40 years. I've made, since 2020, I'm up 150, 200% in some of my accounts. Since 2010, I'm up over, I don't know what it is now, 1,700%. Now, some of that is the investment product I'm in, but most of it is some very good, at least intermediate to long-term timing of the stock market. Okay, here we go. This is France, the CAC or CAC index is what I call it. All right. Level one top, level one bottom, supposed to be going higher in level two. Boy, it's a real struggle. It's not behaving well. It really hasn't done anything since the big blowout and partial recovery of earlier this year. A little concerned it's not going to perform that well for us. It's going to stall out longer. Some of that is their own political issues and financial issues on their government debt side and some of those things. At any rate, it seems to be stalling out for us. And it seems to be coming down into a level three bottom due this week, maybe next, and then back up. Level three is monthly buy sell signals. It's the biggest up and down move or lengthiest or a combination of that. The most important move during a month. We do quantitative analysis inside of many other forms of analysis. And quantitative basically saying what's the best bull bear market for a decade, what's the second best, what's the third best. We like the first best and the third best, don't pay much attention to the second best. Then we take it into intra-year, which is level one, level twos that are the largest moves during a year, first and second place. Then we take it to monthly, intra-month, which is level threes, intra-week pops and drops, level fours, and we're not offering a day trading service even though we make comments whether it's going to be an up day, down day. But the model even goes all the way down to minutes. It can even go down to fractions of a second, but we no longer do that. I hardly look at anything less than maybe 30 minutes or something like that anymore, but the model could use that for additional information. At any rate, on the flip side of this, we can then take that once a decade buy sell signal, build it into super cycles that last maybe about 18 years, 36 years, 72 years, 216 years, 2080s, 2090s. We're going to have a big crashing moment, okay? Around 2050, 2047, 2050, another crashing moment, okay? And just a few years, we're going to get an every other decade sell signal plus the decade sell signal when the market can go down probably 35 to 60%, at least 20, 25%, okay, something like that. In the meantime, in theory, we're in some bull markets and growth, but this time we got Trump doing some things that we're not experienced with. You have to go back 100 years, 500 years for those kind of things. And of course, stock market doesn't go back that far, okay? So we've got some new things to deal with. And so far, I think the model's been quite useful of dealing with these new things. Anyways, France should be moving higher for a few weeks, then down. Don't trust it. I think it's going to do a whole lot of nothing for quite some time, but I'm still long-term bullish. If I showed you the monthly chart, I want to be bullish France for 26, maybe into 27. Let's go to the German DAX, which is really showing a lot of economist type market analysts, investors, traders as wrong for years now. But now it's really stalling out here, okay? Because they keep saying their economy isn't good enough and the stock market has gone up for years and they keep saying that and they've been wrong. And I think there's more higher. The DAX will go higher in 26, I believe, on into 27. But I don't know how good it's going to be. And right at the moment, that's a level one top. It's still apparently searching for a level one bottom. It ought to move into a level two top. But I'm concerned even though it ought to go higher into December, Jan, Feb, which might put it in line with what we're looking for in the U.S. stock market, I'm concerned it can drag its feet, not perform that well for quite some time yet, okay? Now let's go to the Spain. Now Spain, they take care of their people and take care of business, and they're one of the better ones in Europe, and they're pretty good at it. I think that's even more bullish into 26, maybe 27. And I got a better, I think I'm feeling more comfortable. It can go higher into a level 2 top a little later this year. Okay. I think it can be one of the stronger ones, better ones. I think it's due for a level 3 bottom this week. That's a monthly buy signal. Sometimes you get 2 with a sell signal in between, and you can also flip that around as an inverse, 2 sells and 1 buy in between. But generally, rule of thumb is 1 buy, 1 sell a month. So I think we'll see Spain moving higher next week, pull back, higher again, something like that. It can stretch it out a little longer, but I think it's going to try to zigzag. It could be a struggle now, but I think it moves higher into a level 2 top. But again, I'm wondering how well will this go, because at least in the U.S., September and October are the worst months of the year, November, December, the best months. That's been distorted by all the politics and Trump stuff and the big sell-off earlier this year. So I don't know how well that'll work. I also don't know how well does that time frame work for the world and for Europe. Do they do the same things? I've never really have studied that. At any rate, I want to try to be optimistic here on Spain. Let's go to Portugal now. That's another one that takes care of the people and takes care of business. And I believe that one's heading higher into next week. I believe it's heading higher for a few weeks yet. Setback maybe sometime in October, November, but it can actually be up all of October even, and then setback. I think it can probably be higher still in December, Jan, Feb, a little something like what we're seeing for the U.S., but I think all of these around the world could also be a struggle higher into next year. And I do think during the first quarter of next year, the whole world's going to be down, and the U.S. might be down more than the rest of them. It could be a sizable decline as a correction, and then could still be bullish next year, even into 27. But this is Portugal. I think it's looking pretty good. I think anybody wanted to protect themselves from risk, in other words, buy it, starts going down these recent weekly lows, then maybe you get out and reevaluate and adjust. But I think to give it a chance here to move higher, and I am long-term bullish. Let's go to Norway. Okay, Norway takes care of its people and takes care of business as well. They run a fantastic sovereign fund. They know what they're doing. They're already out there on the streets asking their people, what do you want for this country for the next 50 years? Smart people. Smart people. U.S. are dumb people when it comes to that kind of thing. Dumb. All right, any rate, level 1 top going to level 1 bottom. Norway should set higher in a level 2. Back off. I can see it being a struggle trading range for a long time. I can see it having problems in 26 and 27 because the whole world can have problems. But in general, got to be bullish in 26, 27. Economies are probably going to grow. Stock markets are going to do well. Now, short-termers, level 3 bottom. Right there this week, it's acting positive. It's working for us. I think it's going higher into next week. Maybe the following week, back off again, do it again, do it again. Eventually, I put in a level 2, pull back for level 2, then do it again into December, Jan, Feb, put in a level 1, bigger pullback early next year, and then right up again for a bull market. Switzerland, Swiss. I like the Swiss. They take care of the people, take care of business too, but the stock market doesn't behave that way. It's not as spunky, and I keep forgetting. Somehow I lost the model analysis on this chart, and I keep forgetting to go back and take the time to put it back on. Anyway, this is a weekly chart, and this one's a little more of a struggle. I understand it with Switzerland. It's a little bit different situation. They don't really help their businesses that much more to help a lot of stocks compared to other countries, and they are more banking money oriented, okay, and they don't seem to care. They don't care if they have a great stock market or not. That's the way it looks to me. All right, this is, by the way, the SSMI index. Any rate, there's a top there, and it's coming down. This is a level 3 bottom. It's coming up, and this is probably a level 3 top already. So the other indexes can go higher in the next week, but it looks like Norway is going to lead the way down because those others that go higher next week are probably going to be lower the following week. This was ready to go down into next week or the following week. I don't think it's going to do much of all to the upside at all for quite some time. It may be sideways, but right at the moment, there's actually more downside risk, and this weekly indicator is a favorite indicator. We have several, but we only have about one that we really like, and maybe 2 or 3 second place. But anyways, this widen of spread for this indicator, that's a telltale sign that there's chance. That's all you can say is there's chance for lingering downside momentum the next 1 to 3 weeks. That's the best you can tell from that indicator. Well, the model likes that. It's saying, yes, this can go down for a few to several weeks, actually, but it may also be range bound on a longer term basis. I do think it could pick its head up in 26 and 27 and do a little bit better for us at that time. Okay, next we want to go to, this is a fund, UPV symbol on my quote system. It's the Ultra FTSE Europe 2X ETF. I want to think it's ProShares, but I don't know if it is or not. All right, at any rate, it'll make you twice as much and lose you twice as much on a basket of European stocks. And really, this should be working higher in a level 2 top, pull down to a level 2 bottom, work higher in a level 1 bottom, a top, move down to a level 1 bottom, so a bigger sell-off early next year. Problem is, it's moving off a level 3 monthly sell signal, can go lower in the next week, and I'm beginning to think it's just going to struggle, meander. It might be more sideways to down a little even, or hopefully up a little into that level 2 top. It may have problems all the way into early next year and then get better. Keep in mind, some of these European stocks really caught fire after that February to April sell-off in the U.S. After that, they really had a big run-up, and they can be just a little too high priced, a little too far ahead. They may need to digest some things and work through some things, okay? Another European fund that makes you twice as much and lose you twice as much is the EFO. That's the Ultra MSCI EAFE fund. I don't know why I don't put a label on this chart for you. Any rate, level 3 top there or there. If it was there, we got a big knee-jerk reaction, failed. They couldn't put it any higher, come down. It's probably going lower into next week, maybe following week. It doesn't look like it's time for level 2 top, but it may be closer than I realize. And here again, this index or this fund can't go lower for now into early next year. But ideally, there will be some bounces, and it can still yet work higher along the way somewheres before that drop. A little complicated. I think, again, we're probably looking at mostly go nowhere markets now for Europe, even though the U.S. might have some lingering strength for a while. And I wonder, when looking out in early next year, or at least looking out into late October or early November, maybe Europe's leading the way for the U.S., leading the way lower, in other words. All right, not much else going on there. Next, I want to go to Canada. And I'm so proud of Canada, so happy for them. I wished I'd been in there making a bunch of money. Again, one of those scenarios where my money's tied up in other things. I can't invest in everything, but I analyze a whole lot more things than I'll ever invest in. And the model's been pretty correct on this. What a rock solid trend, okay? You really didn't need any modeling analysis. It might have gotten your way because it would keep telling you to sell along the way because it was going too far. This was a true trend follower's dream that so long as it didn't drop any more than that amount there, you could have just trailed a stop up and just gone. You could have used these little blue dots, which is where you'd sell now, and you just wind up making more money than everybody else who's trying to actually predict a forecast. However, we're looking for a level 2 top. We're looking for it to come down to level 1 bottom. I think eventually we'll see some selling in these markets around the world in October, early November. Hopefully they're going to be back up in December, Jan, Feb, but maybe it'll only be the U.S. and then more selling early next year. And we may yet learn many of them just move sideways to lower all the way into early next year, okay? And we can explain more of that in greater accuracy if you sign up for Stock Index Magi at my website at criticalpointpod.com. Okay, any rate, the trend is up. That's all we can say. And instead of analyzing, we'll just say, hey, the trend is up. When it comes down a huge amount, it's not. And that's where we'll change our mind and our opinion. Okay. All right. At any rate, now I want to flip over to what's called my monthly list. And we're going to look at some of the other foreign indexes outside of Europe. One of those, actually, let's go to Italy first. This is just a fund of Italy. All right, and it's just looking, it's a monthly chart. It's going higher in the next year. I don't think it's going higher in the 27 when the U.S. might go higher in the 27, but I think it's going higher in the next year. And at the moment, it can pull back and consolidate a little bit here, but I still think it's going higher, but I also think it's high priced. I think they're a little too optimistic pushing that. All right, let's go to the India index. I think this is going higher in the next year, maybe into 2027 even. I think this is a level 1 bottom in place. I think it should be taking that high out, and that'll tell us we're on our way. When it takes out that record high, that'll be all the evidence I need that yeah, it's in a minor long-term bull market inside of a major long-term, inside of a super cycle that could be bullish India for 20 or 30 years yet. Okay, interesting stuff. Indicator is fighting this. It's acting a little bearish here, the favorite indicator. This indicator is starting to turn around, looking a little better. Okay. Any rate, I think India can go higher. If it takes out this month's low, last month's low, then we need to step aside, reevaluate, question, ask some questions and see what we have going for us. All right, next up we want to go to the Nikkei, Japan, and this is just exploding. It looks great. It looks fantastic. I think it's going higher into next year, well into next year, if not into 2027. I'm happy for them. They've earned it. They worked, but they have their own problems. Higher inflation, higher interest rates. There may be some carry trade currency stuff going on there to cause some problems. Right at the moment, it looks gung-ho. Great for them. Big wake up and makes sense. I think it's bullish, bullish, bullish. Okay. China, all right, China's turned the corner. They're winning this whole Trump tariffs. They're beating Trump. They're making Trump look bad. They're making the U.S. look bad. They are getting more and more exports around the world. They're becoming very competitive, very cheap, getting more and more business, taking away our business. But Trump is just giving them the business. Trump is giving away all our power and influence in the world just because he wants to protect the rich and have a trickle-down economics. And then he gives us that bullshit story of, oh, the government is like England in 1776. No, it's not. His government, and it is his government now. We did have a revolution. We did allow our country to take over, and we did nothing about it. We're like frogs in water when the temperature's rising at a fast pace and we just sit there until we boil and die, okay? That's what's happening. If you want to be a real patriot, you actually have to be against Trump, not be the loyalist, because Trump's bringing in the old England 1776 empire stuff here into the U.S. You know, it's just weird. And he's redressing and making trickle-down economics look like a great and wonderful thing. And the rich are the smartest people, and they have to tell us what to do because we can't do it, okay? Meanwhile, he's destroying our research and development that's putting us behind as China just rock and roll. Oh, they're having a great time. Woo, yeah, okay. Any rate, China probably going higher into next year, looks bullish, pulling back now. It may have to pull back and have some problems in October to early November, probably have some problems early next year. But I wonder if it isn't already putting its level one, it's actually going to do better now than the U.S. and some of the others in the next few months here. It'll be very, very interesting, but I think there's more upside to go. If it pulls back on us, we'll just have to deal with it, work with it. It'll probably go higher later. Okay. What am I missing here? I did the Nikkei. Oh, we want to look at South Korea, if I can find that quickly for you on this list here. South Korea, where did you go? Okay, you wouldn't know it when I'm trying to rush, then my eyes just play games on me. And I'm not seeing it. Hold on a second. South Korea fixed some of their political issues. Apparently it's fixing some of their economic issues, some of their policies. Look at this, man, fantastic. There's your minor long-term buy, sell, buy, sell, buy, and it's bullish into next year. And boy, this is one of their best bull markets I've seen in a while here. It's looking great and wonderful for South Korea. I'm happy and very, very pleased for them. Move on. I think the key here for the future in next decade and many decades to come is more and more countries around the world have to mix in a little socialism with capitalism, with some democracy, with some market economics. That's going to be the winning thing for hundreds of years. We can modify it, change it, and work with it. I think it means take care of your people and take care of business. In the U.S., we are mentally ill, physically evil, sinful people. We think of nothing but business and work. That's all that matters. Our kids can get shot in the street and we can do this and that. And you can't have unions and blah, blah, blah. We need to get back to taking care of people and business. You do that, we're going to have a happier people, we're going to be productive, we're going to be creative, we're going to be innovative, and we can have still a great stock market. In fact, we could have a 300 to 600% up in the next 20 years if we get off our frickin' butts and get these changes get going. Let's get Medicare for all. Let's get higher minimum wage. If you have to, print money from the government and give it to help get that minimum wage up there rather than forcing businesses to get it up there. Let's get some money into the people's hands for retirement accounts. Give them $1 million. We can give them $2 million. The money's there. Don't get caught up in this national debt. You are wrong, wrong, wrong. The national debt is not real debt. We owe it to ourselves. Print that damn money and give it to the middle class and poor. Work harder and harder to make sure the rich can't get even one penny of it. And the same thing for businesses and oligarchies and monopolies and all that. Don't give them one damn penny. In fact, we should tax them huge amounts, but I'm willing to bargain and tax them somewhat more, then print some money, and now we're all happy-dappy. We could have a really good life, a really good time. All right, if you're a foreigner, don't move to the U.S. Be cautious investing in the U.S. If you're a young person, get the hell out of this country, okay? Then again, if you must stay here, go to war. Let's have a little blood in the streets. Let's straighten some things up, clean some things. You younger generations, it's time for you to take command here. Get rid of the old fogies in Washington, D.C. All right? All right. I've had my little rant here, and this is, if you study this stuff day in, day out like I do, you know we're right. You know we're right. And with any luck at all, we're going to do the right thing. If we don't, and then we screw up the next 20 years, as far as I'm concerned, the U.S. is screwed for the rest of this century. And Asia, China will win this century. And the countries in Europe like Finland, Denmark, Norway, they should win this century as well if they can handle what they're doing right now. Any country kind of goes along with those countries and with China goes along with them, copies them a little bit, they're going to do better than the countries like U.S. trying to do its own frickin' thing because we lost our mojo. We can't do the right thing on our own. We need some help, family intervention. Let's go get them, folks. Go to criticalpointpod.com, sign up for 60 days, free trial. You can cancel anytime you want after that. Stay with me 60 days. You're going to want to staying here for the next rest of this decade. It's going to be rock and roll times, good and bad and evil and sin and blah, blah, blah. And I think we can make money out of the good times, even with the bad times. And I've done this for 40 years. And I've already told you I've been up, 1,700% or something from 2010 and blah, blah, blah. All right, put it to work, folks. Let's go get them. All right. Again, past results are not necessarily future results. Have a great day, great week. Thank you.